All right. Hello, Bear Bull traders. Welcome to another episode of After Hours with Traders.
Yeah, good afternoon, everybody, or good evening, wherever you are, and welcome.
And we are here at the office with Brian. Adi is with us from his home because he's COVID positive, so he has to quarantine. How are you feeling, Adi?
I'm feeling a lot better. Yeah, this is day 5, I think. I'm feeling a lot better. I can't wait to start trading again next week.
Good, yeah.
I missed a lot of actions this week. I was jealous. I was looking at your recaps and getting jealous. I'm like, I could have done that too.
Yeah, this week was interesting because the volatility was interesting. There was a lot of news, and in this session, we're gonna talk about a lot of things, including what happened this week, the news in the financial markets, Federal Reserve interest rate change, where the market is going, and talk with about one of the
news that came up this week. So
yeah, exactly. So how did the market do today, Brian? Do you want to start? What do you think? What do you see?
It's definitely, you could see rotation in the market, and we were talking about this in the chat room just before the end of the day. But you could see, technology has been under a lot of pressure this week, and it just continued today. And really, the standouts for me were the financials and the energy sector that seemed to hold up very well and continue to push to new recent highs. So that was it was pretty obvious that money was leaving tech and the high PE names, and they were going into stuff like energy, industrials, that kind of stuff.
Yeah, as of today, I think energy closed 10% for the week. Financial 5%, industrial 1.6%, and all consumer staples almost 1%. Everything else was kind of negative, including technology that closed minus almost 5%. Adi, what's your take on the market in this week?
Yeah, just adding on what Brian said, I think it's going to be an interesting dynamic going into next few weeks. We just have to see if the momentum will continue. It's obvious, bigger chunk of money, the big fund managers are looking after yields. So that's why the money is going into energy. You're getting 5% dividend yield out of energy. You're getting 2.5% out of financial. So, it seems like that's where the money is going. I'm both in JP Morgan and I want to set up an energy trade for next week. So hopefully we'll see that momentum going into next week. So we'll see.
Well, that's interesting because the financials and energy, as you mentioned, they have really high yields. Like Chevron is paying 5-6% yields to the investors. Yes.
Yeah, and the PE isn't completely unreasonable. Compared to like a stock like Snowflake, which is have these really high multiples that have really been hit. So people are definitely, the fund managers, the professionals are really rotating out of the high PE names and going into stuff that's just basically safety trades.
I mean, I was watching an interview, I think Kevin O'Leary was in there, and he was saying every time he's going into, because he has his own ETF, and it's like every time he's going into these pension funds to their board meeting, and he mentions Chevron, he mentioned any oil companies, they're like, we can't touch it, because they have this ESG mandate now that doesn't allow them to invest in oil companies. So all these oil companies have to bump up their dividend yield. They're basically paying you to own their shares and to invest in them. So it's a very interesting dynamic.
What is ESG mandate?
The environmental, sustainable.
Social and governance. Yeah, it's the new thing that's coming into investing. So a lot of these pension funds want to make sure that they have that ESG mandate as well.
In the sustainable. Well, it's interesting because the company that I was working before, it was all about carbon capture and carbon conversion. But actually, the oil companies were investing in these technologies. So a lot of these oil companies now investing in sustainable energies because first of all, they know they're probably going to be obsolete in the next few decades, and the money that they have, and they should reinvent in that. But yeah, Chevron I wouldn't be surprised if in the next 10 years would be, instead of an oil company, would be a leading sustainable energy company. Who knows?
Yeah, no, they're definitely shifting some money and some of their investments into into ESG, more environmentally friendly fuels. So yeah, I mean, they can see the writing on the wall. So yeah, you can see that they're going to be shifting their business models a little bit.
Here's a funny stat, Andrew, for you. Who do you think is the biggest investor in Beyond Meat? We make fun of Beyond all the time.
It should be an energy company.
No, it's Tyson Meat.
Tyson, yeah.
Oh, meat company. Yeah, that's a very good analogy. The biggest meat packing company in the world are actually investing in alternative meat company. That's interesting. Yeah. So yeah, who knows really who's behind that? Did we have any historical situation like this, that the interest rates are rising and we get such a pullback? I think, Adi, you came up with some back in 2016 and 18. We had some sort of a drop. Are we going to see a 10-15% drop like back in 2016 or 18? Maybe we can put the charts later in the video.
Yeah, so this was something I mentioned in my session on Tuesday in the chat room as well. Like January is usually very more volatile on average. 2018, we saw a 10% pullback. 2016 on a bigger cap names, we saw a 10% pullback. This scenario here is very similar to 2018. Fed seems like it's kind of trapped. I saw a really interesting chart the other day. We could put it in the screen as well, that shows when unemployment was so low and inflation was so high. So in one hand, the Fed has met one of his mandate, which is low unemployment. But on the other hand, the other mandate, which is 2% inflation, is way out of the park. So they're kind of trapped. They have to start raising rates aggressively. So I wouldn't be surprised if we see up to a 10% pullback. But it's so unpredictable. Like, I don't want to say something and then next week we're rallying and I look like an
yeah, that would be $1 billion answer if anyone knows exactly what's going to happen. But are they running out of ammunition, the Federal Reserve, to keep the markets high? That's the question. So they have to increase interest rates. And if the question is, if these interest rates are usually small, like how much is it? Like 0.25%, 0.5%? Does it have a huge impact on the economy or the banks?
I'm not sure it has this huge impact. I think a lot of it is psychological. People were expecting eventually the interest rates would start to come up, and now we're getting it, and everybody's sort of following the same playbook. It's not to say that the markets can't continue to go up in a rising interest rate environment either. I mean, when you consider where we are in terms of the interest rates, usually a rising interest rate environment is when economy is strong. So you could make an argument both ways, but certainly in the short term right now, we're getting that sort of negative reaction, especially with the technology stocks. So everyone's reading from the same playbook and they're doing the same things, and the markets are behaving, as everyone expects, because we're all doing the same thing.
So Federal Reserve, the Feds have two mandates: keep the employment low and employment high and inflation low. But now they're stuck in between these two. So one of them is going up, one of them is really low. And
I'm laughing because I thought you want to say Federal Reserve has two mandates: keep 1% richer. I thought that's coming.
And just pop this market.
Yeah.
So it's interesting. We're going to see in the next couple of weeks to see how's the USD dollar. USD was strong yesterday, but it dropped today.
Man, it dropped hard today. It dropped pretty hard.
What was that coming from?
Well, it was a response to the weak. I think it was a response to the weaker jobs number. Basically, the number of jobs that were created was about half of what everybody expected. So we got a drop in the U.S. dollar. So, but and then of course some of the emerging market stocks did well today. Gold did okay. It was green, at least it was green, but. So kind of a bit of a, again, predictable reaction, but the dollar's been very volatile. It looked like it was going to break out, then it started to break down. Now it looked like it was going to break out again. Then we had a down day today, so it's really been all over the place.
Yeah, I see 1% up and down in US dollar. That's a lot for a currency just moving up.
A lot of movement. Currency.
I mean, we're going to get into the Bitcoin in the next section because those crypto assets are also really volatile. Andy, you want to move to ARK and Cathie Wood? Do you have anything on the first part, yield inflation market?
No, nothing. But I saw a really interesting chart. If you put it on the screen, I think that's really useful as well. It shows the correlation between the liquidity in the market and how the S&P usually perform. So whenever you see a little bit of liquidity crunch, rates coming out, Fed rates going higher, or like their open market operation slowing down, you see there's that negative correlation. So I think that's interesting.
So the chart says that actually the market is going down.
Yeah, the stock versus bond year-over leading indicator, that one.
Yeah.
Yeah.
Cool. Well, that's not good news for me because I'm leveraged long. Anyways, let's talk about ARK and Cathie Wood. So Cathie Wood was a superstar. She was a superstar in the last couple of years with the returns that she had on her funds. And ARK, ARKK is the one that's it's just emerging technology sector, but it's not doing well at all. And we want to talk about that. It was trading like at $84 per share. What's your take on that, Brian?
Well, no, I think it really, it sort of epitomizes what's been going on in the market. When Cathie Wood sort of made a splash on the scene and got really popular, she was early into some of these, high tech, no earnings companies, but everybody was piling into them, and so her performance was fantastic. And stuff like Snowflake and Palantir, and some of the meme stuff like Robinhood. Everybody was piling into them, and she was benefiting. Now we're getting the opposite, which we've already talked about at length here, is that everybody's getting out of them. They can't get out of them fast enough, and of course, as fast as her portfolio went up, now it's going down probably even faster. So, because bulls take the stairs and bears take the window. Yeah. So I think, she's really, she's in the wrong space, and she's invested heavily in that. So.
I think she has Tesla. She has a lot of cryptocurrencies in there. And is she in Robinhood too?
I'm pretty sure she had Robinhood.
Yeah.
Yeah. So, and she invested in some of these, which was a little bit surprising. She invested in some of these right out of the gate. I mean, maybe she got some in the initial public offering, but she also invested in them right when they came out. And a lot of them didn't perform very well after their IPO debut. A lot of them sold off. So she was in?
I think she was in Coin. Right when it came out,
Coin. That was the one I was thinking about. That she basically grabbed a lot of Coin right out of the gate, and of course it sold off. So, yeah, we'll talk about Bitcoin in a minute, but yeah, so.
Yeah, I think the problem she's in now is she's selling a lot of her Tesla shares to buy back these companies at a lower share price.
So she's averaging down?
She is, because she does report her trades every day, so. She's selling a lot of Tesla, buying Hood at a lower price, which could work out in the long run. But there was an interesting chart. When you look at like the fair value of where the majority of volume is buying ARK, I think the average is about $100. So the majority of investors on ARK are losing money. And
right.
I did some research before the show, and I compared this to Peter Lynch. We know Peter Lynch as this legendary investor. But exactly same thing happened to Peter Lynch. So Peter Lynch had a monster year, had a 70% return, then the next year, negative 30%. So a lot of people after that 70% return jumped in, gave their money to Peter Lynch, and then when a couple of bad year return came, they pulled their money out. Nobody really stayed. So when you hear that legendary 25% compounded annual return, is if you were with Peter Lynch from the start to the very end. And I think the same thing's happening with Cathie Woods. A lot of people are hyping into her funds, and I think since last year she's only had net outflows, so people just pulling out their money.
Oh, so Peter Lynch in 1980 he got 72%, and then the next year he was down 23%. That's a huge fluctuation.
Yeah.
And so I don't know if you can call it luck or not, but you have to look at it consistently. I mean, Kathy Woods, she mentioned in one of her interviews about the low performance of F1, and she said that when you're looking at emerging technologies, your time frame has to be 3 to 5 years at least. You cannot look at it year to year return. And she does have a point, because her mandate is emerging technologies, and emerging means not like oil and gas and infrastructure there and they're making money, and then you're looking at something in the next 5 years to be commercialized really shows the potential. But obviously it's a very bad return for investors.
Yeah, I mean, her premise is that she's investing in disruptive technologies, something that's it's not going to change the world tomorrow. Or in a week or month, but 5 years out, it's going to change the way we do things, whatever sector we're in. So, yeah, I mean, that's her argument that this is really a long-term play. But
that's their time frame, not investors' time frame.
yeah, well, that's true. I mean, so, we're in an age where we want it now, or we want it yesterday. So, yeah.
Well, I'm a long-term investor in IWM. I believe in all of those 2,000 companies. When you're stuck in a train, you become a long-term investor. Oh my God. So, Adi, anything else from this part? Should we go to next part, which is crypto?
No, yeah, just wishing her best of luck. It's probably a very stressful time right now. She's getting a lot of angry calls from
I'm sure.
investors.
It seems that these rockets, the superstars in Wall Street, they have a time that they come and go. Like Chamath had a really good 2020 with his SPACs, but he's now a little bit quiet because his SPACs are not doing really well. And apparently this market it's just Wall Street is exactly like market, really humbles you. You can't be too much into yourself after a couple of good years. You always have to sit down and
There's a really good quote I like. It says, "There's no gurus in the market, just cycles."
Cycles, yeah, I like that.
I've learned this over the years so many times. When you start feeling really good about your portfolio or your positions, and you're thinking, you start feeling invincible. That's when the hair should stand up on the back of your neck, and you should be thinking, okay, I'm about to get hit by a train. This is the feeling. This euphoria of being right, and being your portfolio's up so much. This is the train's coming down the tunnel, and it's just you're going to get hit. So many times I've found that when I start feeling good, start feeling confident, that's usually when I get sideswiped and didn't expect it. So
I remember last year, Brian, you were trading and you're like, it's getting too easy. It was right at the time of these. And you're like, it's never a good feeling when it's getting this easy.
That's right. It's never a good feeling when it's too easy.
Well, Bitcoin and crypto assets, I think Ethereum by end of today, January 7, dropped another 10% to almost 3,000. Bitcoin is hanging out around $40,000 from the high of $69,000. So what's happening with these crypto assets? Weren't they supposed to be the store of value and be independent of fiat currencies and Federal Reserves?
Yeah, it's I think it just goes along with the whole risk on, risk off. And I think at the end of the day, Bitcoin was a bit of a risk on asset, and I'm not sure if there's anything more to that. I mean, it could be that this precipitous drop could be triggering some margin calls or stuff like that. But usually when you get hard selling like that, it actually, I'm looking at this chart that you gave us. It's a pretty nice looking head and shoulders, and we've gone through the right shoulder of the head up to 69,000, and now we're back down on the bottom side of the left shoulder. So I think we're at a pretty critical area here.
Yeah. It was very interesting. I have a question for both of you gentlemen. El Salvador, what are they going to do? If they ask for a loan from IMF, should IMF give them a loan? Or
the fact that the president of a country is buying the fucking dip, and he mentions that in Twitter. It's not my term, it's his term. on his phone, because someone also had tweet to me, how are you doing that? He said, by my phone. Buying the dip of a volatile asset with a nation's fund, it just seems to me very not normal. There is something seems to be wrong doing that. And yeah, I mean, El Salvador is probably the first country that has adopted Bitcoin as their currency. But yeah, it doesn't seem like a good idea for other countries to adopt like something like this volatile.
Yeah, it's just not stable. It's you know that most countries want a stable currency, something they can, you know, depend on, that they're going to, you know, the value of their currency is going to be the same a week from now than it is, you know, a month from now. So just didn't make a lot of sense, and probably I don't know where El Salvador made that announcement. I think it was the beginning of the year, wasn't it?
I think it was 45,000, 46,000. It was around there.
Was it around 46,000? Yeah, so they've kind of done a round trip. But yeah, I don't know. It seems, again, it seems too volatile to me to be you know, a legitimate currency at this point.
Or even as an asset, I mean, I know Ray Dalio, I was watching one of his interviews, and he mentioned that there is no intrinsic value in cryptocurrencies. Yeah, there is no intrinsic value. There is a speculative value that you can buy and sell, but is there any value in real in cryptocurrencies? Even like Ethereum or Cardano didn't get the applications for, you know, the transactions. Didn't really pick up, did it?
Well, I think Ethereum has some inherent value in the execution of smart contracts and that kind of stuff, but Bitcoin I don't think was ever designed for that. It was always essentially going to be a currency, you know, an alternative currency. So and you know, and again, there's nothing underpinning it. Like when you have a fiat currency, you've got a government that's sort of standing behind the currency, you know, albeit whatever type of government it is. But you know, with Bitcoin, really the value is what the next person's going to pay for it. So.
Yeah, that's interesting. There's definitely Twitter is really funny about the memes about the cryptocurrencies. What the hell?
Yeah.
I wonder what is Dogecoin at right now. It must be 10 cents or something, huh?
Well, yeah, I always laugh because, you know, didn't Elon Musk talk about he wanted to use Bitcoin to buy his cars? Like how are you going to price that? You know, when it's.
And then he bailed on that.
Yeah.
And he said it's because China is. So he pumped it up, and then he said, you know what, we're not going to accept it anymore.
Yeah.
And then, yeah. And then
But it would have to keep changing. The car's price would have to keep changing every day. Otherwise, he'd be taking. If he priced it at 69,000, he'd be taking a bath. If it's down at 46,
exactly.
He's still paying his employees in U.S. dollars. Last time I checked. So.
Yeah, exactly. So it's a very interesting time to see, and really interesting time. So COVID cases, everyone is getting this new Omicron. Adi has it. He's sitting there, but healthy.
Yeah.
Surprisingly, the hospitalization rate has been low. I know there's 1 million people, like a few days ago, had COVID in US. I know a couple of our members, like Mike, he got positive, Ryan is positive, and I think Ed is probably positive. So, but the hospitalization is significantly low.
It is lower. The concern is because so many people are getting it, there's always going to be a small fraction of people that are going to end up in the hospital. You know, so if there's you know, instead of 100,000, 1 million people get it, the hospitalization still may go up for people that are more vulnerable, I guess, if you want to call it that, because people die of the flu every year, and it's, you know, it's always a small fraction. It's going to be a function of how many people get it. But hopefully, yeah, we won't see a rise in hospitalizations, because that's really the issue. But the interesting thing is, and I was listening to some stuff this morning about how it's affecting businesses, and not just businesses, schools, hospitals. A lot of people are getting sick from this, and they're staying home. I think it was Chicago was saying like 25% of their teachers or their school staff were off because of they were sick with COVID. So I mean, and the airlines, of course, everybody's probably heard the headlines about the airlines having to cancel flights because they can't get staff because they're sick. So this is having more of an economic impact. We're hoping that this is just again, I guess Powell stopped using the word transitory, but but maybe hopefully this is just a transitory thing where it's just going to blow through the population. Not too many people are going to get seriously ill, and we'll move on. But in the very short term, we're going to see a lot of disruption again with businesses and public the public sector as well.
Yeah, the flight's been crazy because my girlfriend coming back, her flight got canceled 3 times, so she had to stay in the U.S. for like 2 extra days.
Wow. Yeah.
Wow. Speaking of flights, I saw that airlines were really strong today. American Airlines was ripping today.
Yeah, Boeing. I mentioned Boeing last week as a good trade for the coming year. I think that's. No matter what the airlines do, and I'm always a little bit skeptical about investing in airlines because they seem to lack the ability to make money, but Boeing's always going to make money. So Boeing was up today as well. Some of the casino stocks did well today. So so I think anything that's sort of if you're looking further forward and we're all hoping that this latest variant will blow through and we'll get back to something that's a little bit more normal in the coming months, then you want to be looking at things, recovery trades, if you want to call them that. Excellent.
And now the last part, Elizabeth Holmes, Stanford student, which actually she was a dropout that started a company, and she defrauded investors and doctors and scientists. In the trial, she got convicted. So what's the story on that? Ali, do you know about her?
Yeah, I mean, it's very interesting. The Turnus it's such I think for 3-4 years, it was this stellar unicorn, a company that hasn't gone public, planning to go public. She was on Jim Cramer. Jim Cramer called her the most disruptive company coming in. She did a speech in front of US Navy and she started crying and she said, "I'm doing this for all you guys." So overall, I think it was a very interesting topic for us not to talk about because the level of manipulation, some people say she didn't even know, she was trying her best. But some argue, of course the court obviously argued that no, she knew that she was frauding the investors. I think it just highlights the lack of due diligence because Nikola had investment from GM and she had partnership lined up with Walgreens for something that wasn't even working, for not even an MVP, not even a prototype. So I think it's very interesting. My prediction is she's gonna go to jail for a few years and then she's gonna fail up, come back, write a book, become a celebrity, similar to Jordan Belfort, from Wolf of Wall Street. Yeah, so it's interesting.
Yeah,
So-
it is interesting.
So the story was that her technology, which was apparently a chemical medical device for blood sampling, they were just making up some results and then sending it to doctors.
Yeah, so it was supposed to be a really small machine that anyone could have at their home or at a pharmacy. You just get 1 pinch of blood, and within 10 minutes it will tell you if you have cancer, if you have this proposition to this disease, to that disease. But what's been happening is every time people ask her for proof, she would take the blood and she'll be like, "Oh, machine's not working right now," and then send the blood work to the lab and then present the lab result as if her machine did it. But it wasn't the case. She was just sending it to the lab. And she had so many employees working for her. It's mind-boggling.
Yeah, I think it's just amazing to me, like you said, that so many companies can bring forward products, and to large companies, like when you were talking about the car company, and they don't, you'd think they would do a lot of due diligence, but You know, you would think Walgreens would have deep dived on in her technology a little bit rather, and apparently they just took it at face value. So I guess, you know, some people just want to believe that that there is this great new technology out there, and they want to be first in, and they don't want to hear about the, you know, they don't want to look at it too closely. They just want to think they're in on the next big thing.
Here's another thing that I think there is a big FOMO also in institutional investors as well. Like we were speaking about Cathie Woods. I mean, when everyone is buying in Tesla, when everyone is buying in Bitcoin and cryptocurrencies, it's really hard to be a fund manager for disruptive technology and don't buy into these, because, you know, it's just the FOMO that you're getting. I've done the people who just rushed to buy Dogecoin at 70 cents. I mean, they had all this FOMO that it's gonna go up. This is it. Elon Musk is gonna talk about it in TV, and you know, I'm sure institutional investors all have the same thing, that I gotta invest in that, and that's the risk that comes with investing. But it's amazing that how easy it is.
Yeah.
You know, maybe in the stock market is a little bit regulation, but in the crypto market, every once in a while there is one person comes with an altcoin or shitcoin and promise something, and a lot of people buying it. You know, they form a small community of, you know, Ripple traders or community of Dogecoin traders, and they try to pump it up. Very interesting.
Yeah, I almost feel like we're getting to a point of a bit of exhaustion here. You know, there's only so much money that can go into something. So, you know, people keep putting new stuff out, and eventually that marginal buyer there's just no more money left.
That's why we need Federal Reserve to make more money for us, so we can buy Dogecoin at 75 cents.
I mean, it works in the...
You're absolutely right, Brian. Like compared with last year, that buy the dip mentality, the pullbacks are not being bought back the way they were last year.
Yeah, we're just not seeing it. I don't think, there's just a little bit of a lack of confidence now that, you know, that dips are always going to get bought. So that sort of feeds on itself, that mentality.
Definitely, IWM's dips are not being bought back up at all. That's for sure. I mean, SPY is getting bought back up well, but yeah, definitely the small caps, the companies who have a lot of debt in their balance sheet, yeah, nobody wants to touch them. There was something that I wanted to know, I wanted to discuss. They said that there are only 5-6 companies taking the whole market up. Like those FANG stocks. Isn't it crazy that the whole market, the SPY is just being taken away by Google, Facebook?
Well, it's a thing that's happening. I mean, you can look at market internals, what we call market internals, stocks that are above their 50 moving average, stocks that are above the 200, new highs, new lows for the day. And you can look at that and see that, you know, the market internals, there are a lot of stocks that are below their 50 and 200 day movings average. But then you get these, you know, mega cap stocks, they go up a buck and they push the index up. So it's definitely a fact. And so it's, you know, it's just recognizing where the money continues to flow and flow into, and where it continues to flow out of.
Yeah, it's I think a really good diversification tool is equally weighted S&P 500. I think Invesco has a product, RSP. It's S&P 500 but equally weighted. So like last year, instead of 29%, they returned 20%, but you had reduced your systematic risk dramatically because you're not 50% Apple, Google, Facebook. So that's one way of kind of diversifying against that.
RSP.
Yeah. So it's just 500 companies all gets equal weight.
Get it instead of being market cap weighted.
Yeah.
Yeah, no, that's excellent. That's good to know. That's yeah, definitely. Does it have a leverage product too?
I'll check it.
Drexion probably has one.
He's like an addict. He can't take enough of this levered product.
Just lever it up. All right. So I don't have anything else to discuss.
No, I think that's it.
I mean, I'm gonna go skiing for the weekend. We got tons of snow in the mountains. Whistler Blackcomb. Yeah. Last weekend I was also in Whistler. It was tons of snow.
Tons of snow.
It was like really February. It was just tons of snow. And yeah, it's definitely...
It's a good time to be outdoors.
Yeah.
So
Thanks for you. What's your plan for the weekend?
Oh, well, I don't know, taking the Christmas tree down maybe.
Yeah, that's good. Man, you're having an isolation plan. That's probably.
Yeah, I think a couple more days and then I should be good to go. Hopefully Monday I can start trading back
I
at
see
the office.
Peloton behind you. How's that?
Yeah, so this is a great clothing rack. For hanging clothes out. No, I like it. I think the stock is oversold now.
What is it? What is it trading at now? It was really.
It's around $40, $45 now, something like that. Yeah.
Yeah.
Okay, well, there's your hot tip for Monday morning, Peloton.
Peloton, yeah.
Artie's got one. It's got to be good.
Well, thank you so much, Variable Traders. Really appreciate it. It was a really wild week. I managed to trade I trade all of the days, and looking forward to trade Monday morning. Hopefully, Artie would be back in the office. If not,
Back in the saddle.
Back in the saddle.
Yeah. So everybody, have a good weekend, whatever you plan on doing. But do get out, get some exercise, enjoy the weekend, and we'll see you all on Monday morning.
Thank you. Bye.